If I could shake you by the lapels and make you understand, it would be this. Stop trying to be perfect. You don't need to be perfect to be profitable. So when we look at monthly charts, we want to see, does price drive up into an old monthly high or down to an old monthly low? Because if it's reaching up to an old monthly high, it's probably going to trade basically above it and reach for the liquidity that will be resting above it. And or if it trades down to an old monthly low, it's probably going down here to reach below for sell side liquidity or sell stops. In and of itself, that is a huge paradigm shift, because you want old highs and old lows to react as support and resistance, and that is a fallacy. You're going to see that the market wants to go slightly above and slightly below. To and through. Remember this. Those words are going to be meaningful to you later on. You won't understand it right now, but if you spend time with these lessons, you'll understand it quickly. To and through. In between the monthly highs and lows, you're going to have very specific key levels that are found by finding the individual weekly highs and lows. And you're going to be studying the importance of how price will sweep below old monthly and weekly lows and then gyrate up and down, but reach for an opposing weekly high or low. Now in this chart, you're seeing the monthly levels, highs and lows, but I've also annotated where the weekly highs and lows are. Now the blue levels, I've only put those on there to differentiate highs, and the red levels are lows. It's important for you to understand that in your charts, when you're laying out your charts, you want to have specific colors to reference highs and lows. Because if you don't do this, you're not going to understand what I'm showing you here. When the market is able to break above the blue levels, what that is indicating that is it's able to trade higher and through old highs. Now how it trades above old highs, or in this case the blue lines, gives us an x-ray view in terms of the underlying pinnings of the market. Is it really bullish, or is it just reaching for liquidity and then rejecting? Because if it's taking out multiple blue levels on the upside, that's actually showing an underlying bullish narrative that's in play, and it's going to be reaching for a higher level pool of liquidity, not just simply reaching for a weekly high. It may be reaching for an old monthly high, and vice versa. Everything's said for the opposite. If the market starts to break down and takes out multiple red levels, which would be indicated by a weekly low or a series of weekly lows and or monthly low, then it's showing relative weakness, and it's able to break through not just one old low in the form of a weekly or a monthly level, but it's going down multiple monthly and or weekly lows. So it's seeking some form of higher time frame liquidity. Daily highs and lows. When you get this lesson, you're going to see there are setups every single day. Just know that...
Wow, what you just learned here could change the whole approach to trading. Are you ready to take the next step? Your next big insight is just one click away.